Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning and welcome to the beginning of a holiday-shortened week here in Hong Kong. It's Monday the 22nd of May and this is Money Talk, a warm welcome from me, Peter Lewis. You can listen to this show on Apple Podcasts, Google Podcasts and Spotify. If you go to my website, peterlewismoneytalk.substack.com, you'll find all the links to your favourite podcast apps there. This programme is also on Facebook. Peter Lewis Money Talk is the page, and I'm on Twitter at MoneyTalkR3. This podcast is sponsored by Surfin Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, leaders of the G7 countries met in Hiroshima, Japan over the weekend amid a focus on Ukraine and tensions with China. In the final communiqué, they condemned Russia and made their strongest condemnation ever of China over what they say are rising military and economic security threats posed by Beijing. The statement criticised China over everything from its militarisation of the South China Sea to its use of so-called economic coercion. Beijing has offered to help the Central Asian region build closer transport and energy ties through the construction of gas pipelines and railways in President Xi's first in-person China-Central Asia summit. At the two-day gathering in Xi'an in China, leaders from Kazakhstan, Kyrgyzstan, Tajikistan, Turkmenistan and Uzbekistan gathered at the same time as G7 leaders met in Japan. President Xi urged the leaders to help jointly build the Belt and Road Initiative and deepen interconnectivity. Hopes of an agreement on the US debt ceiling limit before the financial markets open this morning have receded after House Speaker Kevin McCarthy accused the White House of moving backwards in the negotiations over a budget pact. Mr. McCarthy said, "I don't think we're going to be able to move forward until the President can get back in the country." President Joe Biden returned from the G7 summit in Japan late on Sunday. And bourse operator Hong Kong Exchanges and Clearing, which runs the third largest stock market in Asia, will introduce yuan share trading on June the 19th, cementing its role as the world's leading offshore yuan hub. Financial firms can over the next few weeks start applying to become market makers for dual currency trading counters that will allow investors to freely trade stocks in Hong Kong dollars or the yuan. More than 20 Hong Kong-listed companies, including Alibaba, Antasports, Guaisho Technology and HKEX itself have applied for yuan share counters. On today's programme, I'm joined by Lashar, Asia Chief Economist at BBVA Research, and Alex Frew McMillan, a freelance writer and Asia columnist for TheStreet.com. And with a view from mainland China is Yanan Wu, the chairman and CEO of Surfin Group in Singapore.
Talk.
Debt ceiling concerns and regional bank worries returned to send stocks on Wall Street lower Friday at the end of what was a positive week for US equities. Gains from earlier in the session Friday evaporated after Republican lawmakers walked out of negotiations to avert a US debt's default. The S&P 500 closed 0.1% lower on Friday at 4,192, but gained 1.6% over the week. The Nasdaq Composite fell 0.2% to 12,658, but chalked up its fourth straight week of gains with a 3% advance. It was the best weekly performance since March for both indices. The Dow dropped 109 points, or 0.33%, to 33,427. It was the underperformer of the week, rising just 0.4%. And meanwhile, the KBW Regional Banking Index slumped 2.2% on a news report that Treasury Secretary Janet Yellen told the heads of large lenders that more mergers may be needed in the banking sector. Asian stocks, with the exception of Chinese markets, were higher on Friday. Japanese equities led the gains, rising for the sixth straight day. The Nikkei 225 rallied almost 5% over the week and finished Friday at its highest level in nearly 33 years in one of the world's best rallies of 2023. The Topix gained 3.1% over the week, maintaining levels not seen since August 1990. Greater China markets, meanwhile, bucked the trend, with Alibaba results weighing on Hong Kong stocks. The Hang Seng Index dropped 277 points, or 1.4%, to a two-month low of 19,451 on Friday, and the index lost 0.9% for the week. The tech index fell 2.4%, with Baidu, JD.com and Meituan all falling around 4%. Alibaba tumbled 6% after the e-commerce giants posted disappointing quarterly earnings due to sluggish consumer spending in China. On the mainland, the Shanghai Composite fell 0.4% to 3,284, but the index was up 0.33% for the week. And futures markets are indicating a small rise of just 0.1% at the open for the Hang Seng this morning. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Time to welcome our guests. We have with us Lashar, who is Asia Chief Economist from BBVA Research. Morning to you, Shark.
Morning, Peter.
And also with us is Alex Frew McMillan, a freelance writer and Asia columnist for TheStreet.com. Morning to you, Alex.
Good morning, Peter.
Let's start with the G7. Leaders of the G7 countries met in Hiroshima, Japan over the weekend amid a focus on Ukraine and tensions with China. Ukraine President Volodymyr Zelensky made a high-profile arrival at the summit on Saturday, prompting the leaders to issue their final statement early so they could meet with President Zelensky on Sunday. In the communique, they condemned Russia and made their strongest condemnation ever of China over what they say are rising military and economic security threats posed by Beijing. The statement criticised China over everything from its militarisation of the South China Sea to its use of so-called economic coercion. And the statement went on to warn countries who use trade as a weapon that they will face consequences. The leaders said we will push for a level playing field for our workers and companies. We will seek to address the challenges posed by China's non-market policies and practices, which distort the global economy. And they said they would also foster resilience to economic coercion. And on Sunday, the UK Prime Minister said China is the biggest challenge of our age. Shark, what do you make of this? It's rather depressing, isn't it?
Yes, I think from perspective of the Chinese, I have to say that many of these accusations are not true. Okay, but the problem is not how people you perceive you. Okay, for the general public of these countries, G7 or even most of the people in the rest of the world, I think they perceive China, they perceive all these facts from this news medium, from this G7 communiques. So China must be very careful to tackle all these situations because all these G7 countries are big buyers of Chinese product. If all these big buyers have such a big complaint against you, you need to make some adjustment. You need to appease them, let them know that we need to continue to do this business, okay, together. So on the economic side, I think that's a not good signal for China. But at the same time, I also noticed that now they stop using the word like decoupling. They said de-risking.
And what's the difference? Decoupling versus de-risking? I struggle to understand what the difference is between the two.
I think that decoupling is a much bigger project. That means they want to exclude everything with the Chinese element from this supply chain. But now they realize that that's impossible. Okay, de-risking, I think they only focus on some critical supply chains, maybe chips, okay, or maybe in future, I don't know, in this AI's supply chains or in some supply chains like EVs, okay, they try to reduce their reliance on China.
So this is a more targeted decoupling, if you like, that the US talks about. This is really the EU, isn't it? Ursula von der Leyen likes using this term, de-risking.
Yes.
Alex, when it comes to economic coercion, this is the accusation of the G7. It's not totally without foundation, is it? Because Beijing hasn't been afraid to slap trade sanctions on countries that have upset them in the past. They did it to South Korea when they went and bought a US missile defense system. They did it to Australia. They did it more recently to Lithuania when Taiwan opened a representative office under the name Taiwan. So there is some ground for this, isn't there?
Yes, there is. I mean, China definitely likes to throw its economic weight around for political purposes. So I do think they have a point. And I thought that this communique was particularly harshly worded when it came to China. There were, 20 references to China, and it was very explicit, for instance, by saying that there's no legal basis for China's expansive maritime claims in the South China Sea, and stating that G7 opposes China's militarization activities in the region. So, it was quite harshly worded. And so I was interested to see what the Chinese reaction might be. An early indication, if you go to the Global Times and take a look there, is that they're characterizing it as an echo chamber of U.S. talking points. So saying that it's kind of being co-opted by the United States. But I do think that the G7 has a point here, and I do think that it was surprisingly pointed on this topic and quite specific, which is quite unusual. So they really did attempt to tackle what's a growing issue. And just to sort of address the topic of de-risking versus decoupling, I mean, I think under de-risking, you look to diversify your production base and your markets, but you could still be producing goods in China. Decoupling suggests, you're not making anything in China at all, which is obviously going to be impossible for a company like Apple. But Apple can expand its production in India and in Vietnam and other nations, and thereby de-risk its exposure to China.
When it comes to, though, economic coercion, Alex, I mean, the G7 and in particular the United States, its own hands aren't clean, are they? I mean, it's not afraid to use economic coercion itself.
Well, I mean, obviously they're trying to put in place, they have put in place a lot of sanctions on Russia, and are attempting to use economic coercion to get Russia to fall in line on Ukraine. So that's true. But I think generally speaking, they have been stressing the need for a free and open Indo-Pacific and free and open trade. They use those words and phrases several times. So I think they are committed to pushing for that. And I think the claim, for instance, that China's made in the South China Sea are an overreach, and it should not have militarized these islands that it's built out of coral reefs.
Well, it was significant that they invited to the G7 some of these South China Sea and South Pacific countries like Indonesia, like Vietnam, like the Cook Islands. Clearly, they were sending a message directly to those countries.
That's right. And I think Indonesia has the head of ASEAN this year, so they were also there on that basis. But, they did invite some regional I wouldn't say rivals, but countries that have issues with China, let's say.
Shark, what about supply chains? The G7 talked about supply chains, didn't they, for important goods like minerals and semiconductors. They want to strengthen those supply chains. Did you hear any specific details at all about how they plan to do that?
I don't know the detail, but according to the previously issued documents and their previous discussions, we know that they want to reduce their reliance on China, especially on these rare earth things, and also they want to reduce their reliance on specific supply chain with China. As I said, maybe for these EV things, they could become new ones because these semiconductor things have been for quite a while, so it's not a surprise. But I think that recently we do observe that the Chinese EV export have increased substantially. Now, more and more Western countries, they become concerned of this one. I think in future, maybe they will make some move on this one. Yeah.
There was a lot of, there's been bans of exports and chip technology, hasn't there, to China, and we've had Japan and the Netherlands join in. We heard yesterday that now the Chinese have hit back at Micron, banning their products from sensitive areas because they say these products, Micron's chips, are a national security risk. It just seems to be escalating, doesn't it? This is the first time we've seen China target a US semiconductor company like this.
Exactly. I think previously we see that U.S. and maybe Japan and other countries, they make many moves against China, but now China start to fight back. I don't know the result, whether China can get some advantage from this one or not, but personally, I think this kind of escalation, so they will have a bigger damage on this global supply chain. So, yeah.
One of the depressing things about the G7 statement was there wasn't really much of a vision, was there? A global vision about, okay, these are our complaints, these are the things that we don't like, these are the things that we're not going to do, but how exactly are we going to improve relations with China going forward and make sure that supply chains aren't damaged, that trade and investment can continue? That there wasn't really any of that in the statement, was there?
Yeah, it's a really pity because now they don't talk about these long-term things. I think there's many issues that they need to involve China to solve, even including this peace things, including this climate change things, maybe anti-terrorism, all these things that they need to involve China. But unfortunately, now what they're talking about is how to contain China, how to de-risk of China. So I think on a positive note, I don't think this kind of the communique, although we think it's very strong, I don't think they can hold for long term, because they didn't have a long-term vision, as you said. They didn't have a long-term relation design for China and the rest of the world. So personally, I think definitely China need to adjust. But in future, I think G7, they need to adjust themselves as well. They need to know how to coexist with China.
Alex, are you worried about that? There really wasn't much of a vision, was there, about how to repair relations, how to make the global economy more secure, how to make supply chains secure? None of that appeared there in the statement.
Yes, besides China, you can run down that communique, and it then went on to talk about North Korea, Sudan, Myanmar, Afghanistan, Iran, Israel-Palestine, chemical weapons, Yemen, listed all of these challenges and issues and problems. And I think that is one area that people have criticized the G7. It was supposed to be talking about artificial intelligence, for instance, at this summit for the first time. And I guess observers weren't too optimistic that they'd be able to come to any conclusion, because to date they've really failed to address issues like cyber security and cyber weapons, for instance. And they haven't really come up with anything that forward thinking on any of these sort of current topics, let's say. So it would have been interesting to see them address artificial intelligence a bit more specifically, and at least sort of maybe suggest some frameworks or something like that could be put in place, or guidelines for dealing with these kind of new technologies that are coming forward. I do think that there should be more of an emphasis on that in trade deals that are signed as well. So, yeah, it was a little bit of a depressing communique that outlined a bunch of different problems without proposing too many solutions.
Shark, does anything that was said in the communique affect China's economy, either positively or negatively?
Personally, I think this is just a communique. Okay, well, China will continue to do their own things. They will continue to grow their economies. Now they need to have a stronger economic recovery. Okay, I really don't think that will have a substantial effect on China. Or on G7. So I think the G7, the rich countries, they just get together to make a big complaint against China. But when they do their own things, I think for United States, they have their own interest. But for other countries like European countries, Germany, Italy, France, I think they have their own agenda. Although they can form together to make some communiques to criticize China, but when they do this economic relations with China, I think they have the different agendas.
Now, Beijing has offered to help the Central Asian region build closer transport and energy ties through the construction of gas pipelines and railways in President Xi's first in-person China-Central Asia summit. At the two-day summit in Xi'an in China, leaders from Kazakhstan, Kyrgyzstan, Tajikistan, Turkmenistan and Uzbekistan gathered at the same time as G7 leaders met in Japan. Trade, infrastructure and regional security were top of the agenda, and Central Asia is increasingly enthusiastic about improving infrastructure connectivity with China. The long-awaited China-Kyrgyzstan-Uzbekistan railway is expected to begin construction this year. And Uzbekistan is also building a rail line to Pakistan, a key China ally, and Turkmenistan has pledged to expedite the construction of the so-called Line D of the Central Asia-China gas pipeline. Alex, let me ask you about this. First of all, how much of this is, first of all, a reaction to the G7, with China saying, look, we can also do our own summits and have our own relationships as well. But at the same time, is this a strategic area for China becoming more and more important?
Definitely. I mean, it was very interesting to see Xi and China choose to engage with the Stans for a sort of like a competing summit, if you will. And of course, this all goes back to the Belt and Road Initiative and the idea of new Silk Roads that, at least overland, would pass through these Central Asian nations. So it's definitely an area that China would like to improve trade links with and communication with, and improve the ability to trade through those countries and on into Eastern and Western Europe. And of course, there's an opportunity for China to engage more closely or have greater influence in these former Soviet republics at a time that Russia is really preoccupied with the war in Ukraine. So I think China is looking to, sort of step into that void and bolster its alliances with these nations, which, really are not getting a lot of investment from the West. So China is a very important partner for them. I mean, economically and even in population terms, they're not huge countries necessarily, but they're China's neighbors or near neighbors. So an important area that China would like to sort of deepen links with.
Shark, the two-way trade between China and Central Asia, it rose 40% last year. It's hit $70 billion. Kazakhstan leads the way with about $31 billion of two-way trade. This is not to be sniffed at, is it? These are becoming more and more important countries, and obviously energy and mineral-rich countries as well.
Yeah, exactly. I think from these countries, of course, their economic size are not that big, but as Alex said, they're very important in terms of their energy and minerals. I think that for some key minerals and energies, China can depend on these countries to diversify their energy sources. In the past, Russian, they have a very big influence on these countries. So China, now they have the chance to expand their influence in these countries. And also, I think they are the neighbors of the China. I think if they have a stable and a good developing relations economically, I think this is very good for China to stabilize the relation with these Central Asia countries. That's a very good one.
And where does Europe fit into this? Because Europe also wants relations with these countries as well, doesn't it?
I think they... Partially because the G7, they are against China now, okay? So they need more friends more than ever, okay? So in the past, maybe these countries, they're not very close to China because, as I said, they are heavily influenced by Russian, but now they have the chance to make more friends here.
Alex, are we seeing sort of the world split into two blocks? We've got the G7 now and its allies, some of whom were at the G7 meeting, and then we have the so-called Global South, which is sort of led by China and trying to develop relations with developing economies in Latin America, Africa, the South Pacific. Is this what we're witnessing the beginning of?
Well, I mean, yeah, Xi Jinping, when he made his first trip out of China after COVID, went to Kazakhstan and Uzbekistan, I think it was. Those are his first visits. So he certainly has made those countries a pointed area of focus for him. The Global South, I think many people would like to engage with, but China has been much more forthcoming with development aid and investment and infrastructure investment. And, there's a quid pro quo most of the time there. It offers to build, key infrastructure in return for mining contracts, energy contracts. But, I think fair's fair. The Global South has largely been abandoned by, its former colonial powers, and there hasn't been enough investment in Africa, for instance. So if China is stepping into that void, it deserves to get some kind of reward or return out of those kinds of economic relationships. I'm not sure that the world is dividing into a new sort of Soviet bloc versus other blocs, but certainly we do see, I think, autocracies on one hand and democracies on the other, and those are probably the fundamental differences that play the biggest role.
Can countries like these Central Asian republics have relations with both with China and the West? Because the West is courting them as well, isn't it? The EU foreign minister has been to visit Kazakhstan, so has US Secretary of State Antony Blinken. So they're sort of in demand, aren't they, these countries?
they can, but China has, the geographic advantage of being very close to most of these countries. So it can build these pipelines. It can build railroads, from China directly into these nations. So it can really have a direct effect. And let's not forget that most of these countries are quasi-democratic, if not completely autocratic. So they have leaders who are also strongmen who Xi and when he's not otherwise occupied, Vladimir Putin can butter up to.
Shark, final word to you. I just want to get your thoughts about last week's economic activity data that we had out of the mainland. We had retail sales, industrial production, fixed asset investment. What are your thoughts on the economy now, having seen that?
Yes, I think if you look at this industry output data, if you look at this fixed investment data, they all miss the expectations. So I read the detail of all these data. So my conclusion is that we already seen the recovery of from pandemic is coming. But unfortunately, we haven't seen the recovery of the property market. Okay, If you look at all the bad performance items, they are related to the property market in China. If you look at the service sectors, these tourism, entertaining industries, they perform very good, better than people expected. But if you look at all these items related to property market, the investment in real estate, and the related retail sales, like home appliance, all these things, they don't perform very good. I blame the property market. So that means in future, Chinese authorities, they must find more ways to stimulate these specific sectors.
So until that sector recovers, you don't see the overall economy improving too much this year?
I think that, yes, it's very difficult to imagine that you have a very bad property sector and then you have a very strong economy. That's true, yeah.
Okay, well, thank you both very much. You heard there Lashar, who is Asia Chief Economist from BBVA, Alex Frew McMillan, who is a freelance writer and Asia columnist for TheStreet.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
I'm joined now by Dr. Yanan Wu, who is chairman and the CEO of Surfin Group, which is headquartered in Singapore. Morning, Yanan.
Morning, Peter. How are you this morning?
I'm very, very well, thank you. Been following closely the activities over the weekend at the G7 and also the China Central Asia summits. Let's start first of all with the G7. What was your thoughts after hearing that communique from the G7 leaders? In fact, 2 separate communiques they issued, a large amount of it focusing on China and talking about economic coercion and ways to resist that. What are your thoughts about the state of the West and China's relations?
Yeah, you're right. There was 2 versions of the G7 summit communique. I think earlier there was the communique regarding the China threat and China issues. It was strongly, refuted by the Chinese government and also Ministry of Foreign Affairs. So I think in the final version, we can see the tone versus China was reduced quite a bit, but rather focus on the supply chain stability and also decoupling risk. Of course, I think the turning point was at the Ukrainian president Zelensky visiting, at the last minute for the G7 summit in Japan. So I think the tone and the theme of the G7 still regarding the Russian-Ukraine war and also, how to end the war, and also the sanction against Russia collectively. So I think the whole the theme of the summit is still about the worrisome geopolitical risk and also the supply chain decoupling, and that would probably have a greater impact on the global economic recovery, especially on the inflation. With regarding the commodity and the food prices, that still draw a big concern by the Fed and the other central banks.
Are China and the West damaging the supply chains with some of their measures? We've seen these sanctions that the US has put on technology companies, and then yesterday we saw the response from China. It's banned Micron's products in areas that it regards as sensitive, saying that its chips pose a national security risk. How big an impact is that going to have on the supply chain for chips?
Yes, if you look at the semiconductor sector, that's still a big area of the conflicts and the sanctions. Of course, more than 60% production, still in the semiconductor, still produced in outside, China. So that, so that's posed a big, supply chain. For the demand by the China side. So the Micron is a new issue, although, the national security is still a big concern. So the China want to, have its own national semiconductor industry to revitalize so that it doesn't depend on the so-called Western, supply for the semiconductor and chips. But of course, that will take a long time to produce its own national semiconductor and also the supply chain. And on the other hand, I think the sanction on Russia and also its collective efforts also produce a threat for India as well. So India, of course, imported a lot of energy from Russia. So that in the G7 summit communique also mentioned about the Indians' risk about this decoupling.
And India's in an interesting position, isn't it? Because obviously it relies on Russia for its own security. Russia provides it with weapons. It obviously wants to develop relations with China, but also it also wants to develop relations with the West. And as you mentioned, it's benefiting economically from these sanctions because it's buying a huge amount of Russian oil at very cheap prices at the moment.
Yeah, it's a kind of a balance, I would say, for India right now. On the one hand, it relies on the energy import from Russia, so trying to maintain a relatively friendly relationship because he's got historical reasons with Russia. On the other hand, also India also rely heavily. Also want to produce a second, global supply chain outside China, according to the U.S. and Western standards. If you look at the Apple, right, the, 5% Apple products right now, only produced outside China, 95% produced inside China. So we can see Apple start to shift or transfer the supply chain, from China to India, try to produce a second supply chain, production chain line for its own Apple products. So India will benefit from this supply chain transfer. So I think it's a very tricky position that how India plays between Russia and the Western countries to gain the economic momentum from its supply chain dividend for the next decade.
Is India the market to watch, do you think, over the coming years? Because obviously it's now got the world's largest population, and 30% of that population are young. They're under the age of 30. It's a huge economy and growing very fast as well. Strategically, it's in an important place. As you mentioned, these supply chains are expanding through India. Is India going to be the market to watch that we should keep an eye on?
Yes. India definitely, I think, the engine for the next global economic growth, for the next, 10 or 20 years. As you mentioned, the age, demographic dividend, and labor dividend, and also this supply chain dividend will, both, will all contribute to the economic momentum for India. And the recent issue of economics also posed the addition on peak China, so-called, basically, I think the demographic dividend of China is vanished. So it's really the China has to, build its own, national dependent supply chain and also some key industry sectors. So all the supply chain probably will have seen China has enjoyed since WTO, 20 years ago, will probably gradually move away from China, and India definitely will want to capture this big transfer. But of course, I think India also faces some challenges as well, because the education still need to catch up for the laborers, and also infrastructure, has to rebuild and revitalize so that it can, have a better shipping and logistic facilities for getting the supply chain transfer.
So India is one of the countries that's been courted by both the West and China, and they're all trying to develop better relationships with it. The other area that's in focus at the moment is Central Asia, the stans, Kazakhstan, Kyrgyzstan, Turkmenistan, Uzbekistan. China's had the summits, the Central Asian summits with those five countries. How important a region is this going to be to both China and maybe also to the West as well?
Yeah, interestingly, the timing for this China Central Asia Summit is concurrent with the G7 Summit in Japan. Of course, the location of the China Central Asia Summit is in this one of the Asian's capital, Xi'an in China. Actually, is one of also the place where I was born.
Oh, okay. So I didn't know that.
So that's a very coincident. Yeah.
It's also the end of the old Silk Road, isn't it? So it's quite symbolic that this summit was held in Xi'an.
Yeah, so it's really the summit of the Silk Road, if you will, for this interesting timing. Well, I think the one of the perspective you can look at is Russia and Ukraine, still fighting this war, and the Russians' influence in Central Asia was really, I think, reduced because of its heavy, the efforts on the war with Ukraine. So that gives some strategic timing for how China can have a better relationship or gain some, strategic position in the Central Asia. Central Asia also, has lots of energy and food, agriculture. So I think that's from Silk Road point of view, China want to build this strategic relationship. If Russia, influence in this region is gradually diminished, so that can help, supply chain in terms of energy and agriculture. If a Western sanction, or restriction on China become more serious, so I think China want to have multiple strategic positions. On the one hand is Central Asia for commodities. On the other hand is Southeast Asia for its merchandising and manufacturing supply chain transfer. So those are two regions probably are the key regions for China in the next decade.
So I presume also we're going to see a lot of infrastructure projects between China and these Central Asian economies. We're going to see new rail lines, gas pipelines, and so on. We're going to see a lot of activity.
Yeah, a lot of energy infrastructure were built. China already have shipped natural gas pipeline from Russia, but Central Asia will be the diversified pipeline location. So, given the historical reasons, I think Central Asia also want to maintain a neutral position, in this region. So,
sorry, let me just finally get your thoughts on China's economy overall. We had a lot of data last week on retail sales, industrial production, fixed asset investment. What's your thoughts on the state of the Chinese economy?
I think there's, talks about China whether it's going to deflation because of the recent CPI numbers and PPI number also very weak in April. CPI April was up 1.1% year on year, and the PPI was down 3.6% year on year. So whether it's from a producer price or from a consumer price, so economic recovery is still slow, and is gradual. If you look at May Golden Week, the number of tourists, of course, have recovered quite significantly from the previous year. But the spending of the tourist industry by the consumers is still very rational and very, still weakly recovered. So I think that draws some concern on the economic recovery quality. And also, as you mentioned, if the fixing investment, the slowdown, mainly because the debt burden, by the local government vehicles mounted to a high level. The current the loans raised by the local government vehicle has soared to 66 trillion yuan, which is roughly $7 trillion. So that's more than 10. That's about half of China's GDP. So that's already almost double from 2018 level. So I think the debt problem still is a big constraint on fixed investment and where the revenue come from. Because the local government really the revenue for selling the land has down about 30%, according to from the previous level. So how to refinance this fixed investment, and also what's the new government vehicles debt source also is a question to be sorted out. So that's can be constraint for fixed investment.
Yanan, always good to talk to you. Thank you very much indeed.
Thank you, Peter. Talk to you again.
That's Yanan Wu, who is the chairman and CEO of Surfin Group, which is headquartered in Singapore. Thank you for listening to Money Talk this morning. You can find more details about some of the topics I've been talking about today, along with information on other headlines and market moves in my daily newsletter. Take a look at peterlewismoneytalk.substack.com. I'll be back with another show tomorrow. Joining me then will be Asian fund management industry consultant Stuart Aldcroft, James Wong, Chief Executive Officer at Cathasia Securities, and our US economics correspondent, writer and broadcaster Barry Wood. Bye for now.
Money Talk